Hello, welcome back to Weekly Market Recap with Knight. Let's get to it. So in the past 2 weeks, we saw relatively flat, but we'll talk about what happened in each week. But overall, the NASDAQ is down 0.24%. Still year to date, it's down 22.59%. The S&P 500 actually up 0.24%, but still down year to date 14.66%. The week ending September 2nd was actually another pretty red week in the market, but this past week it's been relatively strong. So let's jump into what the market actually did. So over the past week, we did see a little bit of a sell-off on the short week on Tuesday, but then a recovery, a little bit more of a sell-off all on Tuesday. And then basically since then, it's been relatively strong. Some intraday volatility, absolutely, but overall, mostly trending upwards. However, if we start to zoom out over the last couple weeks, we see that for the most part, right around 2 weeks ago, we had one really bad week of volatility, and then we ended up just getting back to similar levels from previous 2 weeks. So why has there been so much volatility in the market? It really comes down to trying to understand exactly what's happening in the Fed. We had this long 3 to 5 week rally in the market end of the summer. And that was really around these thoughts of, okay, inflation starting to trend down. The Federal Reserve might be able to pause. Mortgage rates came down. The 10-year Treasury came down. A lot of positive movement on that side. Then in the past 3 weeks, it's been a lot more uncertainty and pain. Wait a minute. The Fed is still talking relatively hawkish. A lot of the different members have come out and said, we're still going to raise 75 basis points. In fact, the market is expecting in 2 weeks on September 21st for a 75 basis point rate hike. So we haven't actually seen any easing from that angle. And because of that, the market has continued to sell off. However, you've probably noticed that gas prices have significantly come down. We actually haven't seen them sit this low since January. We are seeing some relatively good news on that front. Hopefully that can continue with inflation. We're going to get some inflation information next week. So I think we've seen a little bit more volatility on the downside than I was expecting, but also more volatility on the upside this week. So if you take these past 2 weeks together, it's relatively flat. And that makes some sense because we really don't know if we're about to turn the corner. The labor market is still really strong, but are we in a place where inflation is going to come down? The Fed is going to have the ability to relax, or over these next couple months, are we going to see inflation start to tick back up? The Fed have to double down on their stance, or even if inflation comes down significantly, is the Fed still going to have to continue this contractionary pace? And that's really what the market and individuals don't really know, as well as if we are seeing some of these negative contractionary moments, are we going to start seeing that in the economy? Now, one of the other bad things we've seen over the past few weeks is earnings starting to soften a little bit, and commentary around the supply chain for the most part have caught up. And that's a good news for inflation prices. But the bad news has been that now it might be a demand issue. So supply chains have caught up, but demand is still out of whack in that it's still too strong, which means the Fed has to taper demand. But in tapering demand and trying to really destroy it could send the economy into a recession, which, again, we might be in a recession after 2 quarters of negative GDP already. Just hasn't technically been described as a recession. So we have some good news, some bad news. Overall, a lot of volatility over these past few weeks. I think for the most part, for every average person, every average investor right now, it makes sense to continue investing in the market continue over the long run, but we are going to continue seeing this volatility. So we talk a lot about dollar cost averaging strategies. This would be, again, adding to your 401ks, anything like that. On every time you get paid, you're buying into the market. Those sort of strategies that, again, allow you to buy the market whatever capacity, whatever level it's at. Those are probably really helpful strategies when we're seeing all this volatility, including volatility to the downside, but then also volatility to the upside. Now, looking forward, these next few weeks are going to be very important. One, we have CPI reading and starting to understand, do we have 2 consecutive good months of data, or is it going to be like April earlier this year where we had one really good month and then all of a sudden the next month it was even worse than we had previously experienced? And so that's one of the fears. If we get past a couple or 3 months in a row of really good readings, I think that's will be really strong for equity markets, as well as the Fed on the 21st. Are they able to ease up on the gas? Do they stick with the 75 basis points? What are they seeing in the economy and what's really important for them? So those are the 2 big catalysts coming up. But as always, we're here to support you. Your mind's here to support you. Thank you, and we'll see you again next week.